Welcome. I'm gonna be going over some MA flow, pretty much looking at the pairs I like to look at the most and looking at the market's overview for what happened today, Tuesday, March the 15th. I'm gonna start off on tech. So let's start off on tech and let's erase what I have on the screen. So quick vocab digest. If you don't know how to look at the charts, look at the charts in this aspect of EMAs. We have 1, 2, 3, 4, 5, 6, 7 EMAs on the screen. These EMAs are in 3 different layers. We have our first layer being the 5 and 13 EMA, the second layer being our 100 and 200 EMA, and the third layer being our 400 and 800 EMA. If you can see, they're in different colored zones. These colored zones are pretty much telling you how they're shifting from bearish to bullish, and I trade them accordingly from the cross of this aqua, which is the 50 EMA. So once again, we have the 5, 13, the 50 in the middle, the 100, 200, 400, and 800. And based off of those layers, this being our first, second, and third layer, I use the higher and lower time frames to confirm the direction in trade analysis. So let's get into it. If we're on the 15-minute time frame and I come over to this side of my screen and bring on the 1 hour time frame, let's come all the way here. And I'm just gonna put on the screen a layer of today's price action. This horizontal pink line is the daily opening. So price opens at, what is it displaying right here? 6 o'clock Eastern Standard Time for the NASDAQ. I believe it was 7. Either way, here is 6:30 Eastern Standard Time. And the main thing, and the first thing I want you to notice is the break of our first layer. So how do you know a layer breaks? If we're in a downtrend, if you see this cloud is red, we finally had, let me go ahead and bring this screen in and then zoom in so we can all be on the same page. Right here, after we've had our downtrend, we finally have our break signified by this candle right here. This candle right here is our first candle that closed above our 13 EMA. So I'm going to highlight that candle, specifically the body only, and I'm waiting for price to pretty much break and retest that. So what I mean, if this is the break, then price to come back down below that zone and then continue up. So it went up, came back and retested, tested that break, and now it's continuing. It tried to get over our 50 EMA here, but it failed. So this is our first layer that attempted to break, but it struggled. In fact, it did not do it until this second candle that's down here. This one right here is another first layer. This is our second first layer break. And of course, we always need the break and retest. Now, price will not always give you a clean break and retest, but it will always retest. And I'll explain by that later on many different examples. So price broke up, next candle came back and retested this zone. That's candle closing over, and we continued up. We're mainly looking for our closure over the aqua EMA, the 50 EMA. That is our entry off the 15-minute. The reason we're waiting for the aqua on the 15-minute, because when I bring over the 1 hour time frame, the 50 EMA on the 15-minute is the 13 EMA on the 1 hour time frame. So I'm using these time frame and these EMAs together to give me a future visual representation of what's going to happen. So once again, we're looking at the EMAs in layers. Our first layer is the 5 and 13. The second layer is the 100 and 200. So let's stay right there. If we're identifying this as our first layer break that failed, all right, first layer, and this is our actual first layer break, okay, we're waiting for it to break the aqua as well. Notice how the aqua is right here where that first layer break was. So I'm not even going to highlight the aqua break, 50 EMA break. I'm going to just highlight this first layer break. And remember, we're always waiting on that break and retest. So what did price do? It rallied up. I'm struggling right here. Closed back down and then continued back up. So what's mainly important to know here is, I'll just leave on the 15-minute right here. Once price gives you that retest back down and gives you a bullish candle up, like this candle right here, this is my signal candle to buy. Once this candle closes, after retesting back down past my 50 EMA, I can enter the trade. But there's one more thing I also look to use for confirmation. I use a Fibonacci tool. If you don't know what a Fibonacci tool is, it's just a ruler. So imagine me measuring this bullish move from the low to the high. I measured it, and I'm waiting for price to come back down like it did here. When price came back down, for me, my confirmation say price must at least come 30%. At least come 30%. It did not come 30%, so for me, my confirmations were not enough for me to get into the trade. But for retracement purposes, price will usually tap the 236. If it's not going to come to the 382, it's going to come about 20-25%. That's what it did. It even reached a little into the 30%. As you can see, it wicked down there, came perfectly into that 13 EMA, then took off. Me, I usually have my entries at the 382. Why? Because when I use my risk to reward purposes, if my stop loss is beneath the low, I don't want to have my entry all the way up here trying to chase the market. That is what a lot of us tend to do sometimes, chase the market. So for me and my analysis, I like to be a lot more patient and let the market come to me. So this is where I would have had. I obviously didn't do it, so I missed out on this beautiful opportunity on this first layer break, and I'll get into that later. There's a second layer break that you were able to get into. What I mean by that, if this is once again backtrace, or let me actually replay this so we can be in time, right? Boom, we've had our first candle that once again closed above our 13 EMA. This is our first layer that's breaking, came back, retested, gave you a bullish candle. Okay, price is making its way up. Continuing from its first layer, we're waiting for it to break that 50. Okay, broke it, retest. We must get on a retest. This is when I draw my fib. Before I can enter the market, price must break the 50, break the halfway point, then come back to me, right? Show me, give it first impulse, show me what you're talking about, then we can break bread. It came and broke the 50 EMA. Now I needed it to come back 30%. It didn't come back 30%. Oh, whoa. It didn't come back 30%, but it came back 20, 25, and then guess what price did? It took off. Now, this is where you must use your targets. For me, the reason I identify those, once again, all these EMAs, the reason I have them on my screen is because they're future targets, and that's all they are, future targets. All the EMAs are a visual representation of past structure. So all this price action that happened, I don't have to go back here and do all this research and da-da-da-da-da-da. I can use my EMAs. Now, it's important to know that there's lagging, but I won't get into that. Just know that there are a visual representation of a lagging price structure. So when price leaves the 50 EMA, I use the 100 EMA as my break-even level, meaning once price comes and taps this or comes and reaches this area, I've moved my stop loss to break even. So if I were, let's say, take this for a buy right here at this 236 level, and I have my stop somewhere wherever, let's just say I have it right here, I'm targeting this first EMA as my break even. I'm not closing my trade, I'm just breaking even. My actual first target is the 200 EMA, second target is the 400 EMA, third target 800 EMA. So 1, 2, 3. So we'll just go to our break even first because that's what needs to be hit. Price right here, closing at an aqua. I don't like the market execute into the trade because if you were to wait until this candle closed, look where you are. You're only getting 37. Terrible risk to reward. So I'm saying I use the limit orders, let the market come to me. Price, boom, goes right past our break even level. So I move my stop loss to break even. This is a now free trade, risk free, open money. And I secure partials as well. When you break even, secure partials. Now I'm waiting for it to come back to, not come back, go towards my actual target. Now, if you notice, once price broke, it's always going to give you a retest. Notice what price did here. It broke on this candle, came up, and then boom, dropped all the way back down, touching that 50. It's another reason to be important to have your positions at certain fib levels, because when price begins to retrace, it's going to retrace. And if you put your stop loss to break even, there's a chance that price will come back, take you out of the market, and you're going to be in between in no man's land, not knowing really know what to do. So I like to have my entries below at a certain percent on purpose. So when I move my stop loss to break even, I don't get tapped out. Price comes back, retest, gives you a perfect opportunity to enter. If you did not enter, this literally came to the 50 EMA. The 50 EMA, once again, on the 15-minute time frame. Remember, I'm still using just one time frame. There's a lot to go left. The 15-minute time frame, 50 EMA, is the 13 EMA on the 1 hour. So what price is doing is retesting here right before the breakout. So this is kind of a visual representation of kind of where we are right now. And the way the price went straight past that first target, deeper. Didn't even break, come back and retest. Just straight strength. Now I did retest, I believe, after it came back here. Now I'm gonna pause right here quick because we must be talking about what's happening. We've had our first layer. Price tried to rally up, tested this 50 EMA, was not successfully able to break it. This first layer bullish rally failed, came back lower, waiting for another layer test. Tested this first layer, broke it, retested, successful break. Successfully is coming up to the 50 EMA, break, retest, come, boom. Here is our second layer. This right here is our second layer. This is our second layer. And on that second layer, the same thing. Remember, break, retest. Price broke, came back, retest. And just so I'll make this a different color so we know what it's talking about. After it broke, came back and retested. Of course, we knew that, as I keep saying. After retest, you know where we're going. Up to the next one. First target is used as our break-even level, that 100 EMA. So when price comes up to here, I'm able to secure my target of at least 155 pips. Now, the reason I have my Fibonacci on the screen because the EMAs are lagging and they're just a visual representation. They're not going to give you an exact price point. My Fibonacci level will. So if I see that the EMA is around here, I'm not going to just randomly close at some random level per se. I'm closing specifically at the -618. My next target in between my first target of the 200 EMA and my next target being the 400 EMA, there's a lot of space here. So what I would use to gauge in ranges is my EMA, my Fibonacci, and this is the -100 level, being 224, and in between there is our next target. So I see that this is our third layer. Price is now deep off one extension. Third layer. And not to just go in too much on the EMA flow, but price did not break our 13 EMA. So this is just a healthy bullish retracement. This trend is on the 15-minute, and it finally came up to our third layer, came back, retested beneath, and then what? It continued back up, going straight into our third target. So it's kind of crazy how this trend was so strong that it didn't break. It had multiple tests. Right here, this is our first test. I mean, that's our second test. This is our first test. And what I mean by that, if you look at the candles, they didn't close until under that 13 EMA into this candle right here, and that next candle being here. For me, if I'm in the trade, let's say I'm in the trade and I got some positions running. If it closes under the 13 EMA like it does here, I'll close partials. So my first time it closes, you know what I'm saying, I'll close partials. If it comes and closes again, then I'm really securing partials. I'm really not even leaving anything on the table. I see that the trend is breaking, or at least testing to break. So if I were to highlight this candle right here that's trying to break, notice how immediately after it closed under it, price reversed back over. Price came back and then tested again here, closed under, reversed back over. So it's telling you that the trend is testing itself, but what did it do? It held and went straight towards, oh, well, we're in live price action. But if I had to guess where it's going, straight to that third target, that 800 EMA. Once price hit that 800 EMA, I'm really expecting this trend to break. So this is just one big giant strong move from the break down here of that first and second and third layer break all the way up into here. It's rarely do you see 3 layers being broken in one impulse. If I bring back to the higher time frame, just to give you a visual representation of the EMAs, when price broke the 50 EMA over here on the 15-minute time frame, look at what it looked like here. I'll hide everything off the screen real quick. You see right here, it's breaking the 13 EMA. It went straight up towards that 50 EMA. Boom. This 50 EMA on the 1 hour time frame is the 200 EMA on the 15-minute. So when price broke up on the 15-minute, hitting our actual second target, is actually retesting to enter on the 1 hour time frame. So if I were to use, what I mean by that, if I were to use the same confirmations to enter on the, let's go to a different chart. If I were to use the same confirmations to enter on the 15-minute that I did on the hourly, it would be different structures. Meaning if I used my 50 EMA like this, I'm breaking retest, I finally can enter off of that candle. Then on the 1 hour time frame, if I highlight my 50, the candle that broke my 50 EMA, where's the candle that came back in here and tested? It's this candle. Did it close back here? No, but it definitely came back into this zone. So this is where you must use your Fibonacci, so you can be like, it came back here, but it didn't touch. I'm gonna let my emotions take over me, so I'm not gonna get in the trade. I'm gonna over leverage and do some crazy, blah, blah, blah. No, be professional with it. Bring on that Fibonacci, measure that low to that high. I see specifically it didn't reach that 30%, but it did come 20%. So for me, I saw this personally, was watching this, and I didn't execute into the trade because I had my limit orders down here. But it did come back 20%. Risk it like how you will. Boom. Beautiful. So this is a great breakdown example of just one. This was NASDAQ. Let's go ahead and look at the rest markets real quick, and I'll wrap up this video. Next is, I believe we got tech, right? Not tech, US 30. Take everything off the screen. Remember, in order for us to enter into the market, we must first have our 50 EMA break. First, we must see our first layer break. Our first candle that closed above the 13 EMA is here. So you see how the price action is much different over here on US 30. Especially because, what's happening here? Boom, there we go. Especially because you had multiple candles that gave you a quote unquote confirmation that it's going to buy up to the 50 EMA, but it failed. Failed until it rallied all the way back down here, looking like probably off the negative 113.272. Let's draw a Fibonacci and let's draw in that reversal. Boom, let's make that black. So I can see right here exactly what I said, that negative 13 to new 272, right into that range, then bounced off. But I'll get into advanced. We were just pretty much waiting until it gave us a first layer break. This, let's mark that like that, boom. And this is our actual first layer break. Highlighting the candle that closed over the 13 EMA. Let's make this actually look decent. See this candle right here is the candle that closed over the purple EMA, the 13 EMA. Bullish candle, bearish candle, retested back down, bullish candle going back up. Clean break and retest. And three candle price action. You gotta know your price action. Gives you the confirmation, even gives you a retest here. Price came back even after the closure up here. If you got in late, you missed it, wait for it to come back. Look how it literally came back to you, giving an opportunity, and then it took off. So I'm highlighting this candle right here because this is a candle that broke over the 13 EMA, gave me my break, retest, continuation to that 50 EMA. Wait until we get that 50 EMA. Once it breaks, what I needed to do, come back and retest. Once I see that bearish candle and retest, I'm throwing on my fib. Come back to me. That's all I need you to do, is come back to me. Let's look at the fib like this. Boom, boom, boom. Once again, it did not come back to my 30% level, which was here. You know what I'm saying? I'll have something like this and something like this. This is probably how, you know what I'm saying, I would play my setup with entries and opportunities like this. As you can see, price didn't come back that far. It only went 20% before taking off. So it's gonna give you retest opportunities, but you have to take what the market gives you, or at least read what price is telling you. I see that once we have our 50 EMA break here, price at least came back into the zone, at least came back 20%. So it did retest. So when it comes back and taps into this second layer break right here, it's an instant turnover, letting me know that, all right, this might be an opportunity to start taking profit, or at least moving my entry to break even. Because you can see that this is a tight range from the 236 for whatever reason. If you would have entered here, instead of entering lower, putting your stop, let's say 50%. If your actual first target is the 100 EMA being here, then it's going to be tight, but when you put your break even. So in this case, I probably wouldn't move my break even, my stop loss to break even on this candle when it closed over the 100 EMA like I normally would, because of how tight my entry is. I would actually wait, see if I get at least my first target hit, which I do on this candle right here when it closed above the 200 EMA being my real target. So then I'll move my stop loss to break even, close some partials and wait for it to my next target. Immediately hits my next target of my 400 EMA. Boom. You know what I'm saying? Great. Move my stop loss even ahead, take some more partials off, wait for my last and third final target. Boom. Hits my third target. Clean. Now notice how price starts ranging here immediately after it hits the 800 EMA. That's because the 800 EMA is probably some type of high resistance. If I were to measure from this high to this low, let's put on a selling fib right here. Boom. I can see that price literally wicked in that to that 76, 86 zone. So it's a highly anticipated zone for some bearish movement. Look how prices. Look how strong that is. That is ridiculous. It's so strong that it broke out of all of the zones on the what am I trying to say? It broke out of all of the EMA zones. It broke through all three layers on the 15-minute time frame. So that's why it's important to have your fib, and then to know your three layers. So if this, it's okay, somebody's having struggling to see, this is my third layer, layer 3. This is layer 2. This is layer 1. That's so small to where we don't even trade the first layer on the 15-minute time frame. It broke through all three of those layers, but look at the fib. Notice how it came right there. And then it's going to have its anticipation probably. Before I even start to play it forward, I'm going to go to the higher time frame. Actually, I think this is where we are in current price action. Yeah, this is currently where we are. Immediately showing price could not close above that -618. That golden ratio ain't no joke, boy. Sister, you better quit playing. Notice how we're at the 200 EMA on the 1 hour time frame. This is an expected rejection zone. This is our second target. So I'm not surprised when I'm seeing our first bearish candle on the hourly time frame all day. Look at this. From 5 a.m. to 5 p.m., this is 12 hours, just straight bull, like crazy. How many points is this? The Dow Jones went crazy. 9. Oh my goodness. This is record breaking, probably. Not record breaking, but I know it's up there. So you don't once again see times like this where it's breaking through all three of your layers. This is a different time. So when you are on a 1 hour time frame, I want to say this, and you were to use your same entry strategy, needing for it to break your 50 EMA. If price, let's just take everything off the screen. Let's just go to the 1 hour real quick. If this is my first candle that closed over my 50 EMA, then I need price to retrace. This candle right here is actually and the candle that came back into that zone. I don't know if you can see it. So you would have had to throw your fib from this low to the high of that same candle. But how are you going to know within that same candle? The lower time frame. So this is what I'm going to bring back on that time frame. And I can see that the high wasn't right there. It was actually here off this previous candle when it came back into the zone. So when I see that it came back 20%, this actually whipped my 382. So if I would have had my position right above that level, just because of spread, I probably got whipped into the trade, having my stop right there below the 50 EMA, recent structure. And if this is a 1 hour time frame, so remember, this is my third layer on my 15 EMA. I can't use my third layer as a target from the 15-minute because I don't have any more targets. You know what I'm saying? It went straight into my third final target. So I would either use Fibonacci or, once again, the higher time framed layers. So if my entry is here at the 382 at 33,000, then my first target is going to be what? The top of that second layer, being the 200 EMA. That's what my first target, second target, and then third target all the way up here. Sheesh. All the way up there, 34,000. So price went on the hourly time frame, giving you this beautiful buy setup, giving you 467 buy, and which was crazy. But I'm gonna go ahead and wrap up this video. Appreciate you for coming on. Hopefully this made sense. This is the MA flow, and yes sir. Appreciate you. Peace.